The perspective of the US Treasury emphasizes security and reliability. However, critics of Treasury securities often argue that the massive issuance of these securities reflects a large national debt, which amounted to about $34.9 trillion in July 2024. They argue that this growing debt could pose long-term economic risks, including potential inflation and increased borrowing costs. In addition, they point to the dependence of the United States on foreign investment, in particular from countries such as China and Japan, which hold large amounts of US debt, $1.15 trillion and $1.1 trillion respectively at the beginning of 2024. Historical overview of China in 2024. China's significant share in the US Treasury began in the early 2000s. During this period, the export-oriented Chinese economy generated substantial trade surpluses with the United States. These surpluses have led to an increase in foreign exchange reserves in foreign currencies, which the Chinese government has invested in US Treasuries to ensure liquidity and security. By 2002, China held about $100 billion in US Treasury securities. From 2005 to 2010, China's holdings of US Treasuries increased rapidly, driven by the Chinese policy of maintaining a stable exchange rate for the yuan, which involved the purchase of large quantities of US dollars and their investment in US Treasury securities. In 2008, China's assets exceeded $500 billion. This period also saw the global financial crisis, during which US Treasuries were considered a safe haven, further strengthening China's investments. Investments from 2010 to 2014 marked the peak of Chinese assets. Chinese holdings of US Treasuries peaked between 2012 and 2014, exceeding $1.3 trillion. This peak reflects the continued growth of China's trade surpluses and its strategy to manage the value of the yuan by accumulating dollar reserves. In 2014, about 40% of China's foreign exchange reserves were invested in US Treasuries, marking the peak of their investment in the United States. Gradual reduction of debt from 2015 to 2019. Starting in 2015, China began to gradually reduce its holdings of US Treasuries. This reduction was partly due to China's efforts to diversify its foreign exchange reserves and mitigate the risks associated with holding a large amount of dollar-denominated assets. In addition, China's economic strategy has begun to move towards promoting the international use of the yuan, or RMB. By mid-2019, China's assets had shrunk to about $1.1 trillion. Acceleration of the decline from 2020 to 2024. From 2020, the decline of China's holdings in the US Treasury accelerated. This period has seen an intensification of geopolitical tensions, trade conflicts, and concerns about potential financial sanctions from the United States. In addition to the rise in interest rates in the United States, this has reduced the attractiveness of treasuries as an investment. By July 2024, China's assets had shrunk to about $0.8 trillion, the lowest level since the global financial crisis, representing a decline of more than 68% over a decade. Why does China still hold US Treasuries? Holding US Treasuries provides China with several strategic assets. The economic advantages of US Treasuries are that they are highly liquid assets, allowing China to quickly convert them into cash if necessary. This liquidity ensures that China can easily access funds in times of economic stress or to deal with immediate financial problems. By holding large amounts of US Treasuries, China can effectively manage the value of the yuan against the dollar. This practice helps to maintain a competitive advantage for Chinese exports by preventing the yuan from appreciating too much. The People's Bank of China, or PBOC, uses the dollars accumulated through trade surpluses to buy treasury bills, which helps to keep the yuan undervalued and make Chinese products competitive in the global market. Economic interdependence. Holding large amounts of American debt creates a form of economic interdependence between China and the United States, beneficial for both countries. China has a safe place to invest its foreign exchange reserves, and the United States benefits from a reliable buyer of its debt, which helps keep interest rates low and supports the economy. Trade balance management. By investing in US Treasuries, China can circulate the dollars earned through its trade surplus with the United States. This practice supports the American economy, the continuous flow of goods and services between the two nations and stabilizes trade relations. It also prevents an excessive accumulation of dollars that could otherwise destabilize China's currency and economy. Recent trends indicate a strategic shift in China's approach to its US Treasury holdings, reflecting broader shifts in political dynamics and economic strategies. This change is characterized by an evolution towards diversification and the reduction of dependence on American debt. Geopolitical tensions, especially between the United States and China, have prompted Beijing to reconsider its heavy dependence on US Treasuries. The potential for economic sanctions or other political maneuvers has highlighted the risks associated with holding large amounts of US debt. This has pushed China to explore alternative investments that can reduce its exposure to US economic policies and geopolitical risks. China's economic strategy is also evolving, with the country increasingly focused on promoting the international use of the yuan, RMB, as part of its long-term goal to establish the RMB as a major global reserve currency. By reducing its US dollar holdings, China aims to reduce its dependence on the dollar and encourage the use of the RMB in international trade and finance. Market conditions have also played a role in China's decision to diversify its investments. The fluctuating US Treasury yields and the potential for rising interest rates in the United States make the situation more cautious for China to look for other investment opportunities offering better returns or more stability. By diversifying its foreign exchange reserves into assets such as European bonds, gold, and other commodities, China can better manage its risks. In fact, the US elections and the decision on the election of Donald Trump could have a significant impact on China's policy regarding its holdings in US Treasuries. Under Trump's previous term, relations between the United States and China were marked by increased tensions, including trade wars and tariff increases on Chinese products. A potential return by Trump or a similar Republican leader could reignite these tensions, prompting China to reconsider its position on US Treasuries as part of a broader strategy to mitigate the economic risks associated with political instability. If Trump were to implement strict economic policies such as higher tariffs or stricter trade regulations, China may find it strategically prudent to reduce its exposure to US debt to avoid potential economic repercussions. The future remains uncertain, and we must wait and see how events will unfold. That's it for this video. Thank you for watching this video. We sincerely appreciate you joining us today. If our content resonated with you or inspired you, consider expressing your support by liking and subscribing to stay connected with our community. Your support is of immense value to us. You can watch another video from our channel, which is now on the screen.